Most beginners build ETF portfolios the wrong way. They think more ETFs equals more diversification, so they end up with 5 ETFs, 8 ETFs, even 10 ETFs. And guess what? They're more confused, not more profitable. Here's the truth. You don't need 10 ETFs to build a strong portfolio. You need a simple system. And today, I'll show you exactly how to build an ETF portfolio step by step. Let's be honest. When you first hear about ETFs, it sounds simple, but then you start researching, and suddenly you see S&P 500 ETFs, World ETFs, Emerging Markets ETFs, Dividend ETFs, Tech ETFs. Now you're thinking, which one do I choose? So what do most beginners do? They buy a little bit of everything, and that creates overlap, confusion, no clear strategy. This is called over-diversification, and it's one of the biggest mistakes beginners make. Let me simplify everything in one sentence. A good ETF portfolio is not about having many ETFs. It's about the right structure, because ETFs are already diversified. So when you stack too many together, you're not reducing risk, you're increasing complexity. And complexity leads to bad decisions, emotional reactions, poor results. So instead of asking, how many ETFs should I buy? Ask, what simple system should I follow? Let's build your ETF portfolio the right way. Simple, clear, repeatable. Step 1. Start with one core ETF. This is your foundation. Choose a broad market ETF, for example, a global ETF or an S&P 500 ETF. This gives you exposure to hundreds of companies, instant diversification, low risk compared to single stocks. One ETF can already be a complete portfolio. Yes, really. Step 2. Decide if you even need more ETFs. Here's where most beginners get it wrong. They add more ETFs too quickly. You don't need more unless you understand why you're adding them. Optional additions: Emerging Markets ETF for growth, Dividend ETF for income. But here's the rule. If you're confused, stick with one ETF. Step 3. Keep your allocation simple. No complex math, no complicated strategies. Here's a simple example. 100% in one global ETF, or 80% global ETF, 20% emerging markets ETF. That's it. Simple allocations are easier to stick with, and consistency beats complexity. Step 4. Invest consistently. This is the real power. Your portfolio doesn't grow because you picked the perfect ETF. It grows because you invest consistently. For example, €50 every month, automatically. This builds discipline, confidence, long-term growth. Step 5. Ignore short-term noise. This is where most people fail. They build a good portfolio, then panic when markets drop. That's not a portfolio problem, that's an emotional problem. Your system only works if you trust it. Let's make this practical. Beginner's simple portfolio. Best start. 100% global ETF. That's it. No stress, no confusion. Slightly advanced portfolio. 80% global ETF, 20% emerging markets. Income plus growth portfolio. 70% global ETF, 20% emerging markets, 10% dividend ETF. Still simple, still structured. Notice something? No complexity, no overload, just a clear system. Mistakes to avoid. Avoid these and you avoid most beginner losses. Mistake 1. Buying too many ETFs. More is not better. Simple wins. Mistake 2. Copying random portfolios. What works for someone else may confuse you. Build your system. Mistake 3. changing your portfolio constantly. Every change resets your progress. Stay consistent. Mistake 4. Trying to optimize everything. Beginners want perfection, but investing rewards consistency, not perfection. Action step. Here's exactly what to do today. Choose one investing platform, pick one global ETF, invest your first €50, set up monthly automatic investing, and only add more ETFs when you understand why. That's your portfolio system. Simple, repeatable, effective. If building an ETF portfolio felt confusing before, now you know the truth. It's only complicated when you overcomplicate it. And now you have a system. If you want more simple step-by-step investing strategies like this, subscribe to Online Investment Compass. Because here, we don't chase complexity, we build wealth with clarity, structure, and discipline.